Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update Podcast. This is Craig Jeffery, your host today. Our conversation today is about bank conversions and coming up with a playbook for success. I'm joined by April Levin from Superior. April, welcome to the Treasury Update Podcast.
Thank you for having me.
So as background, technology and business processes certainly change over time. That's part of the nature of work. Banks acquire other banks. They have to reduce the number of systems. And this progress means conversions impact their clients in a positive way in the long term, but in the short term, conversions can range from being a strong success to a negative impact on the relationship, as well as the service level. Today's discussion, I wanted to find out how banks can best set themselves up for success for these inevitable conversion events, and also provide some insight to corporations and commercial clients who use their banks. Before we get started into that, April, could you just give a quick introduction of what does Superior do and what is your role there?
Superior is a Treasury Solutions company. We work mostly within the commercial sector of the banking industry, and we provide multiple solutions to banks to help their clients through the banking process. We do anything from printing checks down to supplying hardware, including warranty repair services. But we have a division that is dedicated to the conversion services. We call that division Technical Assistance Center, where we have a team of people that understand banking platforms inside and out. And their whole purpose is to walk the bank's clients through any kind of process change when it comes to converting from one software to another or one hardware to another.
That must be pretty constant. And in thinking about bank conversions, I want to talk about the broader impact, both from the bank perspective as well as what corporate treasury, AP, or AR users have. So maybe why do we have a podcast on this, but why do banks and corporate and commercial customers care about how the conversion process is handled?
The conversion process can be very painful to people, particularly if they're not expecting it, it's essentially a forced change on the end user to switch platforms. And in the commercial space, that can affect multiple people at the client, particularly because you might have them in the platform using different things. So what happens is, if it doesn't go quite right, they do defect from the bank. We have seen that happen and hear that information from our clients on that they are trying to reduce how many people are defecting during that conversion. And so they really do need to put a proper communication plan in place in order to help those people through the conversion.
Yeah, defecting seems like such a terrible word, right? That means things have gone very badly. That's some good background. And there's so many conversions that happen. Just tech is on the move. As we talk about assessing a conversion project, that's the area that I wanted to dive into a little bit more. There's changes all the time, and we don't need to be super formal about very minor changes. There gets to be a point where I guess this more formal, more organized approach matter. How would you advise banks when a project is complex enough or important enough to target, a higher level of resources to make a conversion go well?
So sometimes a change in platform could be just a small GUI change, and that doesn't require a huge support staff to monitor. It could be done with some communication and a simple help center for inbound phone calls. Most of the conversions that we assess that require more planning and more proactive implementation is complete changes, going from one online banking platform to another, particularly in the commercial space that would affect products such as ACH and Wire, Positive Pay, RDC software. Those require more proactive approach as well as having the assistance, because it's very unlikely that their information will transfer over into the new platform in a seamless way. There's always bound to be some kind of change that's going to happen on the client side, whether it's setting up the service again, or installing and reinstalling software on their own side. The other factor that determines needing a proactive approach to a conversion is if that change is going to happen over a single weekend. So it's what we call a big bang within our industry. If it's a conversion that's spread out over multiple months, it can happen over time. People can come on at their leisure. You don't need to do so much planning around it, and you could probably support it within the bank environment. Once you decide to do a conversion and there's a big bang approach, you'll have the masses trying to accept that change at once, and most likely it will change what your support model will look like after that conversion, just based on the influx of inbound calls and questions that happen during that change.
When do people use the big bang and say, we're on such and such a weekend, the old system's being decommissioned, everything is going to move, this weekend to the new platform, let's say? How often is that done?
It happens more times than we would like it to happen. Almost all online banking platform changes happens with a big bang, with the exception that sometimes we see our clients are able to get a waved approach, so they'll be able to tier out their customers and bring them on in groups. And in other scenarios, we'll see banks be able to acquire a preview period. So you might have 4 weeks prior to your big bang that allows customers in to see what the changes are going to be. And so the big bang has a less impact as far as a negative impact on it. But 9 times out of 10, it's a big bang that we see, even though it's the one thing we wish we didn't see, just because we know it will disrupt the customer experience.
Do you think you're seeing more of that, let's say the 9 out of 10, you're seeing more of that because they're coming to an organization like yours when it is a bigger change, and the ones that they're scaling out the handle on their own more? Is that?
That could be very true. We do get involved in some that don't have that big bang, that are able to tier it out and allow those preview periods. I think the bank gets a handle on what that customer experience is a little bit better when they take those proactive approaches. We also see that, though, in some of the smaller platforms. Most of the larger platforms we see are done within a big bang. We hear from the bank that from a technology aspect, it's easier to do a big bang because the transition is a clean cut. It's you're ending one platform and starting the next over a transition of a weekend, maybe 3 days. So it's much easier on the technology side of the conversion. Unfortunately, it's a harder transition for the customer experience.
Yeah, I always think, sometimes when they're doing construction on airports or whatever, they do 56 adjustments of the road flow because they have to keep the stuff going and change things to make whatever their future plan is. So they got 19 interim steps. All those changes cost money. I think too, April, the cost and calibration of making these changes, sometimes these are they're not necessarily large money makers for the bank or the technology provider. It's how do you determine the resources you put against the clients that, let's say the clients of the bank, some of them might do one thing that's simple. They don't need as much as, let's say really a high maintenance or high value client. Yeah. How do you determine who to target for what type of conversion services?
So we typically advise our clients to break out their customers within 3 tiers. We ask for the top tiers, what they call like a white glove experience. We usually see that the target is the top 10% based on what they consider is their value of customer. And most of it's based on revenue. So they'll take the top 10% and we'll give them a white glove experience, make sure that their transition is as smooth as it can be. They get a lot of hand-holding. They get the premier package, essentially.
When it's a premier package, does that mean that someone's visiting them, that there's a separate call? How does that work?
So they'll get a dedicated rep that will conduct online appointments with them to give them previews and training within the demo experience prior to the transition. If there's change within their ACH or positive pay environment and files need to be uploaded or QuickBooks needs to be reintegrated into the platform, that transition agent will walk them through all those steps or do those steps on behalf of the client. So they're trying to make it an easy transition before the platform goes live. And then once that platform does go live, that agent will reach back out to ensure are all the users within that account, are they on the new platform? Do they have any questions? Is there any additional training that needs to be done? Additionally, we'll house training videos in an online environment that they'll have access to, as well as any kind of training that we might have conducted with them that we can record and send to them.
Okay, if the first tier tends to be 10% is the white glove, what's the percentage of the second tier, and what colorful description do you have for that?
We usually take about 20 to 30% after that, and we give them a modified experience. So instead of conducting one-on-one appointments right off the bat, we'll put them through group webinars. We'll still provide all the wonderful digital help as far as a landing page with videos they can access and help guides, but we'll steer them towards those group settings within webinars that we'll conduct over the 3 to 4 weeks prior to the conversion. And if they find that they still need additional help, they'll be able to reach out to us and schedule a one-on-one appointment.
And what's the third tier? The bottom looks like 50, 60%.
Yep. So the remaining 50% or so, they're typically commercial clients that only have one product. So they're not on ACH, they're not using Wire, they're just using basic treasury management services. Those people will receive all the digital tools that they need. The bank typically will roll out a communication plan that has a series of emails that will lead them to landing pages with help guides. They'll have access to training videos, but they aren't invited to the webinars and they're not invited to one-on-one appointments. Instead, they get all their training as self-service prior to the conversion. And then once conversion weekend happens, then they'll have access to an 800 number help desk in order to get assistance if they have questions after the fact.
Okay. Yeah. So the top tier is one-to-one, very much hand-holding. The lowest level is more self-service. And then the middle tier is a bit of a hybrid. There's an opportunity to get some more assistance, it sounds like. So the whole plan for the conversion's underway. And, you know, the bank or your company is looking at managing those conversions. A couple of things that come to mind. I'll throw some of those out and let you talk about them. We've had conversations before. One of them is activity in a conversion isn't necessarily even. Like you mentioned the 4 weeks before, and you mentioned the conversion weekend. So how do you handle that? And then how do you handle like some of the changes? Like nobody pays attention until the conversion happened. And like, I can't do this. And then they're cycling back. How do you find that conversions can be managed better, particularly with those types of issues?
We recommend that communication starts at least 4 weeks before the conversion weekend. They should be getting information from the bank telling them that it's happening. And then 4 weeks prior, we'll start our outreach on letting them know exactly what those changes are and what kind of access they would get to training materials prior to conversion. There's always early adopters, and those early adopters are the first ones to raise their hand, want to get trained as soon as possible and have access to the system. But then there's always a lull. Most people want to wait until right before, and that's when the influx will come. Our particular solution, we spread out the people throughout those 4 weeks in order to make sure that we have a consistent amount of staff assisting the population and ensuring that we can reach everyone. So our tools are especially designed to spread them out. The goal is to get everyone pre-conversion into training. It doesn't always happen. We estimate on an online conversion, we talk to about 55 to 60% of the population that we have been provided. They're the ones that will reach out to us, that will make sure that they're fully trained. Still have 40% that hasn't made that initiation or the connection that I really should learn this before it happens. And that 40% will be calling as soon as conversion weekend happens.
Okay, so 40% is conversion week, and then the 4 weeks before, you said there's maybe about 60%. Who are the early what percentage of early adopters will call in when the first communication goes out? What does that look like, 10% or less?
Within our first communication cycle, we'll get about 15% of people responding and raising their hand for training. Throughout our communication cycle, our goal is to get up to the 50% within the first 2 weeks. And then that way our schedules will be full and we'll be able to ensure that all the training is taking place appropriately.
Able to scale up, yeah, because it's not just a technical capacity, it's people talking people through things, sure.
And then post-conversion, the 40% is going to end up calling, particularly the ones that have services that needed an extra change involved. But there's additional impact when a conversion happens. If there's a change to any login or password reset needed, say a login has changed from one platform to another, the call volume spikes and we'll get calls from up to 80% of the people affected.
Wow. How does a bank or how do you as a company servicing that handle this? I don't want to call it 0 to 60, but this huge scale up of call volume, on the Monday and Tuesday when people come in, because they're also panicky because they're using banking services to handle it.
So we don't recommend that a conversion happens at the end of a month because month end, particularly in the commercial side, is very important. So we recommend that it happens more mid-month in order to offset any impact from end-of-month accounting needs. And then we staff up appropriately. So we do have discussions prior to the start of a project to understand how many people are being impacted. We do try to figure out if there's going to be particular change when it comes to login and password reset, if it's access that our agents has in order to perform those password resets or login changes that are needed. We prepare as much as we can ahead of time, and then we staff up appropriately. So we bring on additional staff for post-conversion. Those calls can take anywhere between 2 to 3 weeks to get through. The goal is to try to get through as many as you can within the first week to make sure that there's a steady stream of calls. So as calls come in, we have agents manning the phones as well as a system that is recording messages and agents calling back in order to mitigate any of the call volume issues.
Excellent. Now, you've already shared some of the metrics, right? I'm listening for the numbers. The question that I had and still want to ask is, what other metrics are you using to make sure a conversion is, that it's running smoothly? And what might be a signal that a conversion is, I don't know, failing or certainly performing suboptimally, not well? What would you say to a bank exec to say you have to monitor this?
So we look at 3 numbers in particular. One is pre-conversion. We look at what we call a completion rate, or those who have been trained prior to the conversion. We want to make sure our completion rates are as high as possible because that mitigates all the issues that can happen post-conversion.
Well, so high as possible, like you had mentioned, like 55 or maybe 60%. Is that a success? Like when would that be bad?
So 55 would be a success. Anything below 45 would be low, and we would be trying to find other communication methods in order to get that number higher.
Okay, thanks. I just wanted those numbers in my head, but that was number 1. So the completion rate, pre-conversion, and I guess you're on number 2 then.
The second one would be our customer satisfaction scores. Every time we touch a customer, we send a customer survey to ask them how the experience went, and they're allowed to provide us feedback to say if there's anything that they missed or if they need additional training. So we monitor our customer satisfaction scores, and our goal is to maintain a 98% customer satisfaction score.
One question though, you said they give feedback on, is there more training? Is that more training for like the agent, or is that more training? The customer's like, hey, I got it, but the immediate issue is solved, but I need more help. Is that the type of training?
Yes, it's training for the customer. If there is anything that they need in addition to what they already received.
So what's number 3?
The third thing that we look at is post-conversion. We look at our call metrics and to ensure our hold time is kept down to a reasonable amount of time. So that way it's having a positive impact on the customer rather than ending up in a hold queue and not getting their question answered.
I was on hold for 9 minutes. Yeah. Well, that's great. How about before you go live and go live, one of the things I want to know ahead of time was what are the most common concerns or issues that can be encountered? You sort of you did describe how you know if something is a success. Is there anything else on the before you go live or immediately on go live that people should be looking at?
The biggest things to look at before we go live is the impact to the change in system as far as integrations go. So that includes, is the ACH information being transferred over, or does it manually need to be done by the client? Is the QuickBooks integration a simple plugin, or does a file need to be remapped in order to make the integration work? So there's certain key things that will impact the client post-conversion, and those are the things that an agent's going to pay attention to make sure that they're set up ahead of time and ready to go come conversion day.
So that's a great example, I think, right? People who have done the automation to make their process more efficient. It's different if you're changing something you're doing on the screen. You grab something from the desktop, load a file up. That's not much of a change. But if, a bunch of steps were performed by the computer, now they're not, that might not be staffed for those. That's a real good example. April, I know you've written papers. You put out a lot of material about leading practices and what organizations need to do. Any other leading practices for these bigger conversions that you'd like to share? I know you've got a lot, but maybe just pick a favorite one or two.
The biggest one is to make sure you're properly staffed for it. The banks that rely on internal departments that are already doing another job tend to not have such a smooth transition just because they're not properly staffed. So it really is key to ensure that whether the bank brings on temporary staff at the bank or that they contract with a vendor, to make sure that there is enough staff to communicate and touch all the clients that need to be touched during training and post-conversion. The other big thing is to understand the demographic of your clients to ensure that you have people available to assist them. And that could mean bilingual agents. It could mean bilingual materials that they can read, videos that they can see, particularly depending on where the bank is located. That could be a very impactful addition to the service in order to make sure that you're able to communicate with the customers.
Thanks, April. Those are some good examples that it's helpful for any type of change management, whether it's small or it's a larger conversion project. From a commercial or corporate client, maybe a CFO of an organization, small organization, or the Treasury Group or the Shared Service Center, when a conversion's coming up, what would you suggest they ask their banks about, let's say, an upcoming conversion or how they approach conversions? They acquired somebody else or they're just upgrading. What would you suggest they ask?
From a client perspective, they should ask what the value of the new platform or the new service is going to be to them. And they should be able to talk to someone one-on-one to understand that value and how it works and how it will affect the business's staff to ensure that they can use all those products and features. And particularly paying attention to the key products that they use on a routine basis. It might be the RDC product, and they may use check scanners, and how does their current hardware fit into the new platform. They should be asking questions to make sure that the transition is smooth and that their business isn't going to be interrupted.
Excellent. Factoring in a physical item like RDC scanner or card swipe readers or anything else in addition to the digital version. April, this was a good conversation. I kept learning more and more about how this conversions works. I've been part of that with banks and working with a number of companies to see it. But just how you dissect that was very enlightening, and appreciate your time. Thanks for joining me on the Treasury Update Podcast.
Thank you for having me. It's been a pleasure.
You've reached the end of another episode of the Treasury Update Podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.